Alright, just want to do a quick video. Looks like we having closed at 108.27, which I think when we started this, when we sold it, it was 108.33, 34, something like that. If you look back at the video. So we hold the 105. I rolled the 105 from this week to next week for a credit of $1.95. So I got $1.95. I rolled it to next week. The options trading at if you look at next week, the options trading at so let's look at it. So the 105 I think is trading at 139 thereabouts. So I got out of the option today and rolled it to next week and got $1.95. So you could probably do this. I'm not sure if it's better to let it expire and then instead of rolling it, because essentially you're doing two trades at one time. You're selling the old one and then buying the new one. But I thought $1.95 was a pretty good price for not changing the strike price, and then going a week out. And anyway, that's what I did. So I figure I only got $1.44, $1.45, $1.44 net, I guess, on my IRA last time. And I did this for both the non-contracts that I had in cash and the contracts 58 contracts that I had in my IRA. So I've got 67 contracts total for $1.95. So let's assume that they were $1.94 because they charge you something. $1.94 times 6,700. So she put me right at 13 grand next week, and that didn't include the cash accounts. So I made about $10,000 this week, looking to make 13 plus whatever I make in the cash accounts. I've got 24,000, and then the total in the other cash accounts, cash and small Roth accounts, is about 19, I think. So it's about 45,000. So what can I make on 45,000? So let's see. $1.95. Well, let's say $1.94 divided by 105. This is the way I look at it. So that's 1.85% yield for a week, and you times that times 52, it ends up being a big number. So it's almost a double. So I'm really happy with getting that much of a yield. So we got 3 points to the good. We got 2 points for it, almost 2 points for it. So we're 5 points from break even. Plus, I think it's a little bit over 108, right? So, yeah, 108.27, down a little bit after hours, but you can't always tell about that. So, unless there's an event that happened. So, we're over 5 points from the break even. So I'm pretty happy with that. Let's look at, say, the other 45,000. Let's say I make 2% there. It's another $900, and add 13,000. So probably net out about 14,000 next week. So that would be good. I'm happy with that. If you look at it, if you do $10,000 a week, which is spectacular, really, and you do that, every week, that's $500,000. So, I know people could poo-poo and they could say, "Well, I bought Tesla at so and so and it did this," and that's all fine, and I'm cool with whatever anybody wants to do, but I think this selling these puts is sort of safe, and you're still getting humongous returns. So returns I've had was 140%. I'm mainly playing TCL, which is triple XLK, which is the technology. So in 2019, I made 140%, and last year I traded in and out. I made 62% last year. I was really happy with that, the way it ended up. And then this year, we're right at 17%. And then with this trade, we'll be over 19% if it were to go well next week. So we're kind of out of it for this week. We're just looking to next week. That's the beauty of rolling. Could have made more money by let's see, the 105. So the 105 is the 105 is 43 and 39. So anyway, I got $1.95 for it. That's what I got for it. So that's a little what is it, 4 cents? It's about $1.95, $1.96 if you subtract the two. So that makes sense. So I might could have got $1.96, $1.97, or played around with it. I tried $2 and it was 3 minutes till closing, and I kind of wanted to go ahead and wrap something up for next week. I kind of like this rolling thing. I haven't really done a lot of it. I've usually waited till expiration, because if you look, there's still 43 cents left. So I always wanted to get that 43 cents. I always thought that was just way too much. So, or 35, 45, whatever. So I always thought that was way too much. But if you're going into next week and the $1.95 is okay with you, then, and you're not even changing the strike, which I'm not, I'm did it at the same strike. Could have done it a little bit higher, I suppose. You can go longer. The longer you date them, the more money you make, of course. And this thing will probably go up quite a bit. So I have thought about like going to look at the June or something like that. I like making it every week, but this is another option that people have where they don't fret every week. So if you looked at one of these, let's say you look at the June. So June is at 17. Let's say you get the 1785. So let's say 1785 divided by 105 equals, so 17%. 17% if you were to sell the put for June. So I'm thinking by June it's going to be up higher than that, but it could dip sometime before now. But 17% is quite a bit. So 17% times, let's add 1 to that, and times that times what do I have now, 760,000 trading, something like that. That would take me up to 880, so it'd, be 120,000, and then you still have 6 months to go. You could probably turn around in June and do the same thing for December. You probably get 30% that way. So that's another way to play it. If y'all want to look at the longer dated stuff, of course, it accumulates a little bit better if you do 2% every week and you roll it. Then you're going to get more than that. But if you look further out, you don't have to worry about it every week. Then you're still getting a big sum. So what's the break even here? Break even here is almost $18 that you got. So 105 minus 18, $87. Your break even's $87. They have to go down to $87 for you not to make money. So that's awesome. Let's see if you went out to. Doesn't look as good. Oh, let's see. Let's say you went out to the next year. So 2021. So these are normal options, but $30, $30 divided by 105 is 28%. So 28% if you give up the whole year, that's really good. And you're protected down to what, 75? So you're protected down to 75, and you get 28% for selling the put. And let's times that times 760. See what you get. So that almost puts me at $1 million if I did that. 977. So I'd have to come up with another 23,000, and so that's an option. That would be an option to do that. So, and you're looking at nearly 30% return, and that's not quite a year because we're already. It's almost a year. So 30 divided by 105, 28 and a half, 28.6%. So look at these options, and you can sell puts later dated. I kind of do them by the week. I did roll this one, so I rolled it. It's a week and a day. But remember, Monday is a holiday, so we'll be out Monday, and so we only have 4 days of trading. So you only have 4 days for this to go back down. Of course, if it went down the first day, you'd only have 3 days to get back up. So I guess it depends on how you look at it. But I think this is a pretty decent bet. I kind of thought that this might fall today or this week, but it looks like we're hanging right in there, down a little bit after hours. But I think it was 108.34 when we started, and and now it's only 108.27. So we made money, and the stock didn't even really move, and we made over $10,000. Well, I made the cash to buy at 107 and sell at 108.50. So that looks good too, because it's down below what I bought it or what I bought it for. So let's look at what so it went up to 108.74. So I sold it 108.50 this morning. I sold it right in there, I guess, somewhere. Yeah, probably right in here. So that was pretty good. Then we dropped down to, the low was under 106. So you could have made 2 points just trading it. That's another option for people to do. The thing that I like about TQQQ is that the track record is just phenomenal. So if you look at the track record, and if you look at the track record of what's happened, so this is showing, I don't know why this came up, but this is showing about 10 years. So it's 43 times in 10 years. And let's look at this versus the. Let's look at it versus the just NASDAQ as a whole. So it's down here. So let's look at the 2-year chart. Look at the 2-year chart. It's 358, which is 4.5 times. I mean, so that's incredible, right? And you know, the NASDAQ's up, you know, a double in the last 2 years. If you look at 5 years, you know, you're looking at 17x, and this is only 3x. So these triples really do make a difference. If you change your date range here from I guess you could do 2010, no, 2010. So that would be 11, 12, 13, 14, 15, 16. Yeah, that's not, that would be right for 10 years. So if you apply this for 10 years, then you're looking at 59x versus 5x. So 10 times more. Because you're getting a multiplier effect every year. So anyway, that's what we did. So we got out of it. We got out of it and went into it for next week. So we're adding the 105s for next week. We're out of the 105s for this week. Was that good? Bad? I'm not sure. I'm calling and I got the full amount, and I got $1.95 for next week. You could look at it a little different. You could look at it like I bought it back for 50 cents and got $2.50 for next week. However you want to look at it. Either way, I'm happy with it. So we'll see how it goes this coming week.